If you watch this entire video, I'm gonna show you how to become a successful day trader from A to Z. So the first half of this video is gonna be beginner stuff, and then the second half is gonna be my strategy and extra resources so you can actually learn how to day trade in the markets, all right? So if you're a new trader, watch the entire video. And if you're an experienced day trader and you're looking to get some insights on my strategy, you can go ahead and fast forward to it. So let's get started. What is Forex? The Forex market, also known as the foreign exchange or FX markets, is a global marketplace for trading national currencies against one another. It is the largest and most liquid financial market in the world, with a daily trading volume exceeding $7 trillion. So if you travel to a different country, you've participated in the foreign exchange market because you have to exchange your US dollars for, let's say, the euro. So if you go to Spain, right, you're gonna have to exchange that dollar for the euro so you can spend euros in Europe. A currency pair represents the value of one currency relative to another. Essentially, when you trade Forex, you're simultaneously buying one currency and selling another. So each pair consists of two parts. You have the base currency, the first currency in the pair, let's say Euro USD, and then you have the quote currency, the second currency in the pair. If you're buying the US dollar, that means you're shorting the euro, okay, and vice versa. If you're buying the euro, that means you're buying more euros and the US dollar is selling off. Leverage lets you control more money than you actually have, and this is how Forex traders make a lot of money. Example, if you have $100, you could trade as if you had $5,000, but be careful because it works both ways. So you can make a lot more money in a short amount of time, but you can also lose a lot more money in a short amount of time. So quick strategies, you have fast trades. You can jump in and out of the markets to grab small profits, and then you have big moves. Wait for prices to break out and follow that trend. Then you can limit your losses, and this is more of a risk management terminology. But if you're only willing to lose $100 on that one trade, then you can set a stop loss in place to prevent you from losing more money than you want. Okay, so candlesticks are exactly what you're seeing right here. So you have a red body, which is a bearish candle, meaning price is going down in value. You also have a skinny little area called the wick, and that just means price is exhausting, right? And then I have a bullish body right here. So the fat part in the candle is a body, the skinny part is the wick, and then the green part is the green bullish body, all right? So candlesticks are plotted on a chart over time, and you can look at any time frame on your chart. So for instance, if you're on the S&P 500 on the 1 minute time frame, you're gonna notice that the candles are moving up and down every single minute. So this one candle moving up and down represents 60 seconds worth of time. So if it prints out green and then that 1 minute is over, it's gonna go on to the next candle and then start moving the next candle. So there's tons of time frames. You can do the 1 second, the 5 second, the 10 minute, the 30 minute, the 1 hour, the 4 hour, and the daily. It just really depends on what kind of trader you are, but we can talk about that later on. So time frames just shows price changes for a set amount of time. How do you buy something and then how do you sell something? I'm gonna show you a quick example on TradeLocker. That is one of the most popular trading platforms for Forex right now. So I'm gonna show you really quick. So drag your mouse all the way over here to where it says order panel. You can also hit O on your keyboard and then expand the order panel. And then what you can do is you can move up your position size right here and then essentially just hit buy. So once you make a buy, you're gonna notice that I have two positions. So I bought XRP, and then now you can see that I bought Euro USD right here. So you can see the money floating. I'm positive 94 cents, and it cost $3.29 to get into this position. All right, so that's how you buy. Let's do a sell. It's the same thing. You want to go to the sell position. So let's go ahead and do a standard lot. And then I'm just gonna simply hit sell, all right? So now you can see that I'm selling Euro USD, meaning if I'm selling Euro, I'm buying US dollars because Forex, there's a pair connected to whatever you're trading. So again, you just simply hit sell or buy. We can get into risk management and stop losses in my strategy. So if you want to skip to that, you can go ahead, but we're gonna continue doing the beginning stuff. So what is a support? Support is a price level where a currency tends to stop falling and may start rising again. It acts like a floor that prevents pricing from dropping further. So you can see my example right here. Price came up, came back down to this area, came up, came back down to this area, and then again came up, came back down to this area. So you can see I have a little purple line, and this confirmation just gives me more clear confidence that every time price comes down to that level, it's gonna start going back up again. So I drew a support level right there. What is a resistance? It's the same exact thing, except it's gonna be on the ceiling this time. So you can clearly see that price is going up to a specific level and then starts falling. It goes to this specific level and then starts falling. I like to look for 3 confirmations to confirm that this specific area is a resistance. If it's like 2 or 1, it's a little ambiguous and you don't have enough data to confirm that this is a strong resistance. Moving on, what is a trend? So a trend is the overall direction of a market price movement over time. So you can have upward trends that are going up and to the right. You can have downward trends or a bearish trend, and then you can have a sideways trend, which is called consolidation. All right, so a trend just gives you an idea of where support and resistance is, so you can maximize your probabilities in the day trading game. Candlestick patterns are very important, and they're used a lot of the times when it comes to technical analysis. Technical analysis is just a type of trader. Mostly retail traders are using technical analysis to predict what's going to happen in the market. So I do have the links right here on this slide. So if you want to get access to this slide, you can go ahead and download it on my website. But right here, I do have one example, well, 2 examples, and you can see that this is a hammer and then this is a hanging man. But there's plenty of patterns that you can recognize in the markets. So we have single candlestick patterns, we have double candlestick patterns, and then we also have triple candlestick patterns, all right? So if you're interested in studying that, I do have the resources linked in this Canva presentation. So now let's talk about technical analysis. So technical analysis is the study of price charts and patterns to predict future market movements. It focuses on historical price data, trends, and indicators rather than economic news or events. So we're talking trends, we're talking indicators like EMAs, SMAs, we're talking about the support and resistance that I just showed you. We're talking about chart patterns, right? Like candlestick patterns or head and shoulders and triangles and things of that nature, all right? So everything combined is basically you using a lot of tools to figure out what's gonna happen with the market. Now that we actually talked about technical analysis, we're gonna get into how to choose the right broker, and then we're gonna hop into the strategy, okay? How to choose the right broker. Your broker connects you to the Forex market, so reliability, transparency, and low cost are essential. A trusted broker ensures smooth trades, fair fees, and protection for your funds. So key factors to consider: low cost, look for brokers with tight spreads and low commissions to maximize profits. And then a trading platform, right? That's where you make your executions. Make sure to look for a reliable and user-friendly platform, just like TradeLocker. I love TradeLocker because it's modern, it's super quick, and I just think it's the best. And then obviously customer support. You want to have good customer support. Why do I trust Osprey FX? Well, they've been operating for a very long time now, gaining trust in the Forex trading community. They offer the low spreads and fast execution and advanced trading options, right? So what I mean by that is they give you up to 500 leverage. So if you're looking to grow your small account into a large account, you can do that relatively quick with a high leverage account, all right? It also supports Trade Locker, which is amazing. So I do have a link so you can actually open your account, either a demo or a live account. This is an affiliate link because I don't sell any courses. So if you do want to support me, I do make a small, tiny commission when you open your account, all right? So if you want to support me, I appreciate you. Next slide is just basically a link to start your live account. And then if you want to start a demo account, I do provide the demo account link as well. Why does risk management matter? All right, so risk management ensures you survive in the market long enough to see consistent results. It's not about avoiding losses altogether, but managing them effectively to protect your trading capital and maintain long-term profitability, all right? And so right here, I'm giving you parameters. This is all hypothetical, but let's say you're risking $50 per trade and you trade 10 times, you win 4 trades, and then you lose the next 6 trades, right? I broke down a realistic profit and loss statement, and you're gonna see my risk reward setup. So every single trade, you're risking only $50, right? And then the reward is $150. So if you win a trade, you risk $50 to make $150, which is a 1-to-3 risk reward setup. And then over here, I just did 10 trades total. So we won 4 out of 10 trades. The 4 trades made us $600, and then the 6 losses lost us $300, which net profits us $300 total. So this is why it's so important to have good, proper risk management, because you can have a low win rate, like 4 out of 10, which is like 40%, and it sounds pretty bad, but if you have good risk reward setups and you have good risk management, you can actually make money consistently in the markets by understanding your P&Ls, your risk management, and your risk to rewards. My strategy involves simple technical analysis and price action. I do use some indicators, but it's very minimal. This is a very simple and effective strategy. So if you've been struggling as a trader, pay attention. So you want to start off on the daily time frame. And when I'm marking up my support and resistance, that's what I typically do first. When I'm marking up my charts, I pull out the line chart. The line chart just gets rid of all of the noise. Let's actually get out of these trades really quick so that way there's no confusion. Okay, so the first thing you want to do is you want to identify the support and resistance areas. So the reason why the line chart is so powerful is because I look for simple vertexes. A vertex is basically this. You want to find a V shape, right? So this right here is the vertex, because again, remember support, you want to look for price coming down to a specific area and then rising again. So I'm going to look for 3 areas that's going to confirm that this area is a support. So you can clearly see that price likes to hang out right here, which is an area of interest. All right, so now that we found our support, let's go ahead and find a resistance area. So right here, you can see clearly that this is another area of interest because we have price coming up 1, 2, 3, and then price is respecting above that area. So this would be another area of interest. And now we're gonna do 2 more. We're gonna find price below where current price is. So let's go ahead and find another area of interest. So it doesn't have to be perfect, y'all. This is basically eyeballing and just identifying areas where price likes to hang out. So in this case, we see price coming up here, right? And then price where current price is, you can see it's coming down here. Now let's do 1 more above the last resistance, and we're gonna find that price likes to hang out right here. So let's go ahead and zoom in on this a little bit more, and then boom. So price came up, price came over here, price came up and then started falling again right here. So that's more than enough for me to confirm that that's a good area of interest. So now that we have 4 areas of interest, we want to start getting more granular and go into the 4-hour. Let's go ahead and bring out our candlesticks right here. And then now you're going to see a lot more detail, right? So right here, you can clearly see some sort of pattern happen. Oops, So right here, you see prices falling, and then again, we see a little bit consolidation, and either price is gonna go up or down. So the next part in the strategy is you wanna hop into the 4 hour, and then you're gonna notice that I have my EMAs. So an EMA is basically the exponential moving average. So you're gonna find that right here. You simply type in EMA, it's gonna come up as moving average exponential. Once you click it, you can highlight this right here, and I need you to adjust it. So go ahead and adjust the first EMA to 50. So the second one is 21. And then I made this one green. I made the line chart a little bit thicker so I can see it better. And then boom. So now we have our areas of interest marked up. We also have our EMAs. So what I look for is I look for strictly price action areas to optimize my probabilities. Then I look for price to respect the EMAs. So let's go ahead and hop back out to the daily time frame, and you can see that price is hovering below the EMAs, right? Which is a bearish sentiment. And then the 4 hour, right? You can see that price is hanging out. If it loads, you can see that price is hanging below the 50 and the 21 on the 4 hour. And then again, you can see price is hanging below majority of the time on the 2 hour, and so on and so forth. So in order for me to get into a trade, I need at least 3 time frames to respect either below or above in order for me to get into an execution. So that's the first confirmation of finding a setup. The second confirmation is a break and retest. So you can see that price has been hovering and hanging out in this area right here, right? So we see consolidation, it breaks below, and then it starts coming up in this area again. And so I would say that there's really no clear area of price coming up or going all the way down. So I would consider both of these channels no trade zones. So I'm gonna highlight this no trade zone. And I'm also gonna highlight this area a no trade zone, okay? So no trade zone, okay? And the reason being is because if I say, hey, price is gonna break below and come all the way down to this area, I'm basically just guessing, right? So we need to have a solid confirmation that price is going to break below. So what I do is I wait for price to either break down beyond this area right here. So price needs to break all the way past this area, right? Retest, and that's when I get into a trade. So I'm getting into a short position right here. And the reason being is because once price breaks that specific area, there's a higher probability that price is going to continue down. So we know on the higher time frames, right, the daily and the 4 hour, you can see price is respecting that 21 and 50 EMA. So I'm going off of the higher time frames for me to confirm that this is still bearish. So we see there's lower lows, lower highs, lower lows, lower highs, lower lows, lower high, and then continuation down. That is a real trend. So I need price to come back below this area, retest, and then I can get into a short. From here, I'd put my stop loss right around here, and then I would take it to the next price action area. So I haven't marked up a price action area, but it's basically looking for another level. So right here, you can see that price likes to hang out right around here. So let me zoom in really quick. And you see multiple areas where price likes to hang out. We see price hanging out here, here, and then also over there. So that's 3 confirmations that tells me that price is going to come down there eventually, right? So again, let's go back to this. We have price respecting the EMA on the higher time frame. So we need to wait it out. We can't be impatient. We need price to come down and break below. Once it breaks clearly, we need price to retest, and that's when I would start looking for opportunities to get into a short. This is going to be the same thing for buys as well. So if price, let's get rid of this really quick. So if price starts coming above, right, and it breaks this area right here, now we see price has broken not only this channel, this support, but it's also coming above the 50 in the 21 EMA. So now once it retests, starts consolidating a little bit, I want to look for buys right here. So this is where I would start getting into a buy opportunity. I would do a long position. I would put my stop loss right here, and then I would take it to the next area right here. I typically like to look for 1 to 2 risk reward setups. So if I'm risking $1,000, I'm risking 1,000 to make $2,000. 1 to 3 is even more beautiful, but there's less opportunities finding 1 to 3s. So right here, you can clearly see this is a 1 to 2 risk reward setup. So I'm gonna get into it and hopefully make some money. That was a lot, but hopefully everything made sense. I do have a free Discord where we do Sunday market breakdowns. I do trade live Monday, Wednesday, and Thursday, and this is absolutely free. So if you're looking to join a community of traders, you can go ahead and join mine. I do have this entire presentation so you can slow down, rewind it, fast forward it, and access these resources that I shared in the presentation. All the links, all the resources, all my affiliate links are in this presentation. So if you want to get access to it, I'm going to provide it in the link in the description below. But I appreciate you guys tuning in and watching the entire video. If you do have another trader buddy that is interested in learning price action trading, go ahead and share this with them. That way they can learn too. Peace.